Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the question, is this move to the upside a wave C, a wave A, or a wave 1? Now let's assess the probabilities here. If this is a wave C to the upside, it means we're going to find continuation to the downside, as a wave C is part of a corrective structure, being an ABC expanding flat, where we then have a 3-3-5 wave move to the upside. Now for an expanding flat, it is by far most common to take the high of wave A, and we are then looking for an A, B, and a wave C to the upside. So by far most commonly, wave C ends after the high of wave A, and also preferably wave C is quite a straight line to the upside. But as you can see now, price has been ranging over here instead of continuing its way towards the upside, which lowers the probability that this move to the upside is part of a wave C. That increases the probabilities that this move to the upside over here is part of a wave A or a wave 1 for eventually more upside. If we then go to the low time frame eventually bearish scenario, we are indeed looking for a continuation to the upside. In this scenario, we then look at a finished wave 1 over here in green after this diagonal was ended with this wick low over here. For now then, a move towards the upside, looking for a wave 2 around the golden pocket taken from the high to the low of 1. But also we have interesting resistance here with the blue target box, which is sitting between 29.7k and 29.8k for then potentially a move towards the downside. It is good to know that a wave 2 most commonly is a zigzag structure, which is a 5-3-5 move, and it does usually end after the 0.382 fib time that you take from the beginning to the end of wave 1, and then the 0.382 fib time is currently sitting on Wednesday the 16th of August at 4 a.m. in the morning Central East European time. So that is an important time on the chart to at least keep in mind. Now you also see the target box, or at least target box, you see the text box over here, blue 5 and green 1, not yet in, question mark, another impulse down. Could it be possible that we get another move to the downside and then a final zigzag in wave 5? Well, I had a little look at that particular scenario, and in my opinion that is also quite unlikely, because then we have to move the high of this wave 4 either to the right, for then this to be a wave A, B, C, but then wave B over here, this high took the high of A for then an A, B, C, which is not allowed because we're then looking for a 5-3-5 structure before then a bounce to the upside. And if we want to try and count a 5-wave structure in here for then a 5-3-5, and also this being a 3-wave, that's quite difficult, because over here it looks more like a 1-2-3-4-5, then a zigzag correction and a 5-wave move to the downside, and then an A, B, C. And if we try to count a 5-wave structure in here, it's kind of impossible. It's like a 1-2-3-4, but then 4 goes above the high of wave 2, which is not allowed, and there's not really any other great way to count this structure over here. So it makes much more sense. This is an ABC to the downside, where the low of 5 or wave 1 is made over here. And also, if we still expect to move to the downside, then we now want to see a 3-wave structure, but at the moment we see one big move towards the upside. If we look at the micro bearish scenario, then we are looking for upside, but eventually more downside, because it matches the low time frame bearish scenario, right? That's why it's called the micro bearish scenario. But in this particular scenario, we are then still looking for a move to the upside. However, you can also see that if this is then a wave A to the upside, potentially already finished at one of these highs, then we are looking for a retracement to wave B. And the fibs over here are the most common target areas for a wave B, between the 382 and the 886, which is between 29.3k and all the way down at 29.1k. So that is of course quite a big area. Now we do have at least a little bit of support here and there. You can pull a volume profile around the 382. We have some support. We have over here a order block. As you can see, there's also a gap for more support, and the golden pocket is always an interesting area. So there's enough reasons to eventually find some support if price is going to move to the downside. It can be interesting though to first hit that daily naked point of control at 29.550 before a move to the downside starts, but this could potentially also be part of a bigger corrective structure. But that is something we have to assess and wait and see. But it is at least good to know that so far price has not really retraced deep enough to validate a wave B or a potential wave 2 if you are looking for a 1-2 and continuation to the upside in 5 waves. then you actually want to see at least the 0.382 hit, which clearly is not the case. And that is the reason why, if this is potentially the high of A here, I'm still looking for more downside, but that doesn't mean you can get a flat structure where you take the highs maybe even all the way up here and then a move down, but that is something we assess. But a move to the downside is still very much a possibility for then a bounce to the upside in potentially an ABC structure. Now, this being an ABC, like a single ABC, for example, over here, and then a 535 might be very, very, very short, because here is the 382 again, right? For the low time frame bearish scenario where you want to see wave 2 preferably end after the 0.382. So either this wave B can be a very complex long sideways structure, or this ABC is only the first structure of a bigger WXY. That's then something I'm looking for just because of time. If you then look at the low time frame bullish scenario, then in this particular scenario, we are looking for a double 1-2 scenario, where we then have a wave 1-2, 1-2 continuation to the upside in a bigger wave 3, where I believe, if we go to the micro soon, that wave 2 is not yet in, but it did find support at least on top of the golden pocket. Now, this second wave 1 in blue is a lower degree wave 1 compared to the first one over here, because the blue count is part of the higher degree wave 3 in green. However, this wave 1 over here is longer in time and in price, which is not really what you want to see compared to the first higher degree wave 1. Usually, the lower the degree Elliott wave, the less time the waves take, and also the less price it covers. However, this one is longer in both time and price, which doesn't really support a double 1-2 scenario. If we then zoom in to this structure over here to maybe get a bullish count at least out of this particular scenario, then over here we're looking for a W in a zigzag, then a complex wave X, and looking for another wave Y to the downside, where also the support area that we just missed out on with this wick is very interesting, between 28.9k, or basically 29k, to 29.1k. Now, in this scenario, the reason I'm looking for wave X to still end over here is because of a potential double zigzag that we had going on over here, or at least I should say over here, where this wave Y could move to the left. But for a double zigzag in a WXY, you want to see wave X break this trend line, which is taken from the beginning of W to the high of the first B, and then an ABC over here. However, you can clearly see that this wave X didn't get even close to the trend line over here, and therefore the probabilities are lower that the low of wave Y is made over here. And that is the reason then why for wave X I'm looking for a move above the trend line over here, which then is a W in a zigzag, and X, and then potentially an expanding flat to the upside, where wave C tends to then be a 5-wave structure, where again that resistance area around 29.7k is very interesting indeed. If we look at the CVD divergences, then we had a little bit of bullish CVD divergences locally that already played out, because this high was taken. We had a higher low in price, lower low on the CVD. This high is the target, got taken. And currently, if we look at price, we have bearish CVD divergences with the high, lower high on price, higher high on the CVD. And that actually happens while we are testing the point of control over here, and also this order block. So this is actually an important little order block with these bearish CVD divergences. It has to be said that after a swing failure pattern move, where the low over here takes liquidity of previous lows, that CVD has a higher probability of being leading, and therefore, I'm patient. I have the time to assess what price is going to do, and assess the probabilities after we get a little bit more information. So if we then go to the probabilities of the different scenarios, then currently on the low time frame, the low time frame scenario is a higher probability, or bearish scenario is a higher probability scenario, where we are looking for a wave 2 in the making, for then eventually a wave 3 to the downside. And if we look at the micro scenario, then also the bearish scenario here is the higher probability one, where I don't care if price is moving up first and then down, but I am eventually looking for at least the 382 to be hit. And if price is going to move to the upside, then depending on the price action we get, the fibs might move with. However, looking at this being an impulsive structure, for example, over here, we could say this is like a finished structure, because now we are ranging for potentially a wave 2 or part of a corrective structure, that is. So Currently the fips are taken from the low to the high, and we wait if we get a move up and then a move down, but I would like to see at least the 382 being hit for then a bounce towards the upside. But don't forget about the daily naked point of control at 29,550. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.